Hello and welcome back. Here's again another exercise case on value-added tax. It's this time a very short one. A German employee from Hamburg opens an opera glass from a Chinese seller, name is CS, for a price of 16 euro. The opera glass is sent by mail from Beijing, China to the address of the customer. The contract was established by the help of the famous internet platform eBay, and eBay had a right to retain a commission of 10% of these 16 euro from the price, and then had to pass on the remaining money to the Chinese seller. Yeah, so that's the case, and now we have to look for a solution. So first, what we have to do first is probably to analyze the contract relationships so that we see what has to be looked upon. And the contract here, it's Chinese seller to German customer, has to be split up into two identical contracts between CS and the electronic marketplace eBay, and second one eBay and the private German customer. We need reasons for that. And the reason will be that electronic platform scheme or rule that was to be found in paragraph 3, subparagraph 3a of the German VAT Act, and we will have to have a look on that. So here you see it. It's again the same rule which we already had a look on in the last exercise case. It's a relatively new one, introduced approximately 2021 or so. Paragraph 3, subparagraph 3a, electronic portal business transactions or electronic interface related transactions, however you want to translate this. Well, an entrepreneur who, via an electronic interface, supports the delivery of a good whose dispatch begins and ends within the EU to a recipient named in 3A5 sentence 1. This is a private customer, or at least a customer who is not subject to the so-called acquisition tax, is treated as if he had received this good for his own enterprise and then had delivered it himself. That is definitely not our case, because the good here comes from China, so the movement does not begin and end within the EU. But sentence 2, the same applies also in cases in which an entrepreneur has, via his electronic portal, supported the distance selling of goods which are imported from the territory of third countries in packages with a value of less than or not more than 150 euro. That is our case here, because the good which was sent was sold for a price of 16 euro. So 3a sentence 2 seems to be applicable here, and we have now to check if that's really an electronic interface. What we have here, eBay. Yes, it's an electronic marketplace, electronic platform, electronic portal, or something similar. So yes, and the distance selling in the sense of sentence 2, must be sentence 2, not paragraph 2, is the delivery of a good which is transported or sent by the deliverer or on his account from third territory to an acquirer in a member state, including that delivery in which the deliverer is taking part indirectly only, so if he organizes the transport. Acquirer is a person defined in 3A5 or a person named in 1A3 number 1. So persons who, for purpose of a purchase, are treated as a private person. Okay, so that's it. 3A, no, 3A sentence 2 is our case and applies. So paragraph 3, no, 3A sentence 2 applies. Good moves from third country to the EU plus value is less than 150 euro in a single package, plus customer is private person. So contract is split up into two identical parts as, or two subcontracts of similar nature as described above. Now, the transport of the good from China to Germany, does it belong to contract 1 or contract 2? There has been a rule implanted into the law, 3.6b UStG. You know 3.6 and 3.7. 3.6 is the rule for where a delivery takes place if the good is moved, and 3.7 if it's not moved, and 3.6a and 3.6b say if there is a bundle of contracts but only one transport, to which delivery or which contract then the movement of the good belongs. So we will have to look this up just simply now. And if we have a look on what the German law says here, it's relatively plain and simple. The place of delivery in case of paragraph 3a. So if an entrepreneur is treated because of paragraph 3a as if he had received a good himself and then had delivered it to another customer, then the transport of the good is deemed to belong to the delivery which is made by this entrepreneur. So that means the transport is seen to happen between the DBay corporation and the private customer. That, ladies and gentlemen, in turn now means that DBay, the delivery DBay to private customer, that here the good begins to travel from China to the private customer in Germany. And now delivery number 1, the Chinese seller delivers to the electronic marketplace DBay. Then we can see, or we can conclude by sheer logic, this must have happened before. And at the end of the first, or before this second delivery began, the good was still in China. And before it also was in China. So it's relatively clear that this is a case of delivery without a good, whereas this here is a delivery with a good, with a movement. Sorry, delivery without a good, what a nonsense. Delivery without a dispatch or a transport or a movement of the good. Sorry. Now, if we have to have a look on that, then we see delivery number 1. Here we have CS, or to test is again paragraph 1, number 1 of the UStG. And what we have here is it's a delivery paragraph 3, 1 UStG. Ownership is deemed to have been transferred to dbay, place paragraph 3 7 USDG is China, so this is not taxable at all. So this is, from the perspective of the German and other EU administrations, relatively easy and very convenient. We can genuinely ignore that transaction. Now transaction number 2 is dbay to Germany, private customer. To test is again paragraph 1, number 1 UStG, and we have a delivery, paragraph 3, 1 UStG, deemed to be from dbay to private customer. We have the place. Basic rule is paragraph 3, 6, sentence 1 USdG. That would be China, but paragraph 3, 8 USdG. If the deliverer has to pay the importation VAT, which is to be assumed here in all probability, because the customer will not go to the customs office here probably, then the place is shifted to the inland. We have, however, to test more specific and special rules, paragraph 3c USdG also contains specific place rules, and we should have a look on that rule. Also, that is relatively new. So, paragraph 3c USdG, the place of delivery in case of distance selling, as place of delivery of an intra-community distance sale is regarded the place where the good is to be found at the end of the transfer to the acquirer. That's not our case, because it's not an intra-community transport. Because here the shipment begins outside the community in China, so not our case. But 3C2, as place of delivery for a distance sale of a good which goes from a third territory and is imported into another different member state than the one in which the transfer to the acquirer ends, then the place of delivery will be seen to be where the transportation ends. So let's say if the good comes from China, crosses the EU border, now not in Germany or not on an airport in Frankfurt, but in Paris or in Poland, and is imported there, then the place of delivery is shifted to Germany. So then the delivery would be taxable in Germany. This might be the case here, but we cannot be sure because it's nowhere said where the place of delivery is. 3C3. The place of delivery for a distance sale of a good which is imported from a third territory into that member state in which the transfer to the acquirer ends. This would be the case when it is imported in Germany, is deemed to be in Germany if the tax on this good has to be declared under the special tax declaration regime of paragraph 18K. In that case, paragraph 3, 3a, sentence 4 and 5, that the customer must be a private person, have to be applied accordingly. 3. In case of a distance sale in the sense of 3, 3a, sentence 2, sentence 1 is applicable accordingly for the delivery to which the transport is attributed in accordance with 3, 6b, even if the tax for this good has not to be declared under the special tax declaration regime of 18K and an entrepreneur or someone else on the behalf of him is taxpayer for the importation, and so on. So let's look to that last sentence. In case of a distance sale, in the sense of 3.3a sentence 2, we have exactly that constellation. The place of delivery is shifted to the place where the acquirer lives. Sentence 1 is applied accordingly. For the delivery to which the transport is attributed, here the delivery from DBay to private customer, under 3.6b, even if there is no importation tax, even if the tax has not to be declared, under 18k, because even if it is a German supplier, and if an entrepreneur or someone else is taxpayer for the importation VAT. So that's a kind of a parallel to paragraph 3.8. Okay, so let's sum up. It's sentence 3, which says the 3C3 rule is applicable. So we have to test 3C UStG. Paragraph 3C1 and 2 are not applicable, but paragraph 3C3 sentence 3 UStG shifts the place of delivery to the inland if the supplier is the payer of the importation VAT, and that's plausible here. So nothing is taxable in Germany. Do we have an exemption? We have to check paragraph 4 UStG, and no reason for an exemption can be seen, so it's fully liable to tax, because if you can't prove a right to a tax exemption, when there is no tax exemption, everybody always has to prove the things which are positive for him or her. So if you can't prove that a tax exemption exists, then there is none until it can be proven. Number 3 now. The tax base is the gross amount, or is the net amount. That's paragraph 10, 1, sentence 1 and 2. That's the gross amount minus VAT included therein. So 16 euro times 100 divided by 119. And this is 1345 or 1344, depends on how you round. Number 4, the tax rate and the tax amount. It's 12.1, 19%, since paragraph 12.2 does not apply to opera glasses. So the tax is 2.55 euro. That's it. The taxpayer is the entrepreneur. 13A1, number 1 as always. And this is here due to the fiction DBay. The tax arisal is at the end of the preliminary declaration period, during which the delivery happens. Here the date was not given, but at least you can see the rule 13.1. The invoice is simply a regular invoice from DBay platform to the customer. Declaration duties, no peculiarities, just DBay has to declare that thing, nothing special, nothing went wrong. And input tax claims, none can be seen here. DBay would, since they have a taxable and fully liable output, could claim all input taxes related to that output, but we can see no concrete input here, which would have led to an input tax. Okay, that should be sufficient already for this example. You see, it's a rather complicated set of rules here, but one can get used to it in the course of time. Thank you for watching. Hope you recover well from this small little exercise and come back next time again. Goodbye and till next time.